Good morning. I'm Simon Gatt for Finance Malta here at the Malta Financial Services Authority. I'm speaking to Professor Joseph Bannister, the chairman of the authority, on banking regulation in Malta. Good morning, Professor Bannister.
Morning.
Some of the world's largest and most respected banks have been at the heart of the very costly financial turmoil of recent years. Maltese banks have so far maintained solid values and core banking principles. However, there have been changes introduced through, for example, Basel III to minimize this. How is the MFSA participating in these changes and how is it applying them?
Well, the MFSA is part of the European regulatory system now. So it's been participating at working party level and also at the level of the implementation of the directives. In fact, the directive is now transposed in our legislation. There are the obligations and requirements of this directive, which have now been inserted into the compliance that has to be carried out, both on-site and off-site. So all the information comes to the MFSA at the micro level. It initially goes to central bank, actually, at the macro level. So there is coordination at the macro and micro level, which then obviously translates into the stress testing of the institutions, which is carried out. It's a central bank function under systemic risk, and obviously with our participation. So there you have the European stress test, which is also then being applied here by the central bank. At European level, there is a selection of institutions, and then, but at the local level, the central bank carries out its own work.
Are the results of these stress tests published anywhere?
Ultimately, the central bank issues reports, as it does,
yes,
the quarterly reports, on a consolidated basis, yes. It's very difficult, and this is a major issue of great debate in Europe, whether there should be individual or consolidated basis. You have to remember, there is a population everywhere in every country that does not need to be alarmed sometimes. You can't have people trying to identify which bank is going wrong or not going wrong.
Yeah, it could be dangerous.
And that is a danger which, well, Malta is small, but I mean, look at the big countries and these banks that have cross-border activity, which then, might impinge on several countries.
And presumably the stress tests are designed to test the whole of the system rather than individual banks?
No, they test individual banks to see their capital requirements in particular, whether they are conforming with the directive. Yes. Then obviously that looks at the system as a whole in terms of systemic risk.
Presumably besides capital requirements and so on, I imagine there are other important factors which go towards the stability of the system. For example, how much of a role, for example, does education and training play in ethical aspects of finance as well as the technical?
The ethical aspects are now coming in, which is very important. And well, we give training at all levels in the implementation of the directives. We even recently, in the case of banking, we had the German supervisor here, and he conducted training on-site and off-site supervision with our people. It's much easier now to get the trainers here than sending the people abroad, because we're expanding. You can't just send 5 people all at the same time. So it's much easier to bring 2 people here and spend the day working with the staff. And this is happening across the board, not just in banking, but also in the other supervisory units. So then the banks, obviously, they must have manuals and their own training in place. Where necessary, we conduct the training then for the institutions as well. Now, whether that's conducted at an international level through seminars organized here, or whether it's conducted by ourselves, bringing in people, it depends on what's going on at that point in time.
Banking, by its very nature, is very, very international. How does the MFSA have the relationships with its fellow regulators across?
Yes, as part of the European system, obviously, these boards and the various sub-boards of the various authorities meet on a regular basis, and we have full representation. In terms then of cross-border activity, there are now colleges of supervisors. So if you take, HSBC or the Austrian banks, on a regular basis, the person handling the supervision of that particular institution then meets with his colleague, whether in the case of Austrian banks in Austria, Bosnia, Latvia, wherever the Austrian banks have branches or subsidiary, and they meet around the table. The bank itself is also present to make representations, and then they carry out the joint supervision of the institution. Before the entry of these colleges, we used to have bilateral meetings. Say, for example, the Austrian banks, they used to meet here, and then once here, once in Austria, with the supervisors. Now, obviously, the whole thing is much more formal.
Well, yes, so presumably, if you're doing it bilaterally, if you had a bank in several different countries, you have a lot of separate meetings.
That's right. But now these are things that came out of the crisis, and in fact, we participate because now they are not under the home supervisor controls. But obviously, it's now per institution, not on a country to country. So we participate in all the colleges of the Austrian banks, of HSBC, of Deutsche Bank, now I believe Fortis Bank as well. Yes. So we ensure that we are present and know what's going on.
As you pointed out, the Maltese banking system is becoming a lot more complex, new banks and so on. And a number of the larger banks are converting them into one-stop shop, full-service financial providers. This presumably implies greater complexity in the product and possibly in the way you regulate that. How do you handle this complexity?
There is a distinction. Complexity in the product does not mean complexity within the system. The system here is limited in the sense that the banks do not sell insurance. And largely because they are in a monopolistic situation, so that's not allowed. They do sell life insurance, but through different companies. The two complexities are arising is that traditionally the Maltese banking is a conservative banking system. It does not borrow to lend, and that forced it to withstand certain shocks. Now, obviously, with the entry of new banks, the banking model is probably changing, and the regulator has to control exactly the stability of the institution. Yes. To ensure that institution is not creating some form of systemic risk. In the case of the products, the complexity, that's something different. Unfortunately, some of the products are imported. That's where the cross-border activity is now going to help. However, recent European directives, particularly on securitization, on credit rating agencies, I think will give more transparency to these products.
Thank you very much, Professor Bannister.
Thank you.